Okay, hi everyone. Well, welcome back to this video. We're going to talk a little bit more about what is credit. And of course, the term credit, when we use it in the financial sense, means one thing. And we will talk about that in a minute. But I think it might be worthwhile to go back a little bit to the root of the word credit, because I think that kind of sheds some light on um, the whole concept of financial credit if we go back and look at the root of the word. And if you think about the word credible, what does that mean? Or credibility? Okay, what do those words mean to you? Well, credible and credibility they really mean believable, right? If you're credible, it means that somebody can say, Bob's credible, and so because Bob's credible, I believe what he says. Or Bob has a great deal of credibility. He follows through with what he does, and I believe what he says. And so, believability or trustworthiness, right? That's kind of what the word credible really means. And so you can see, though, that the word credit really comes out of the word credible. And so then when we talk about financial credit, what we're really doing is we're measuring your trustworthiness, measuring trustworthiness, if I can spell that. I'll write it messy so you can't tell if I spelled it right or not. But we're really measuring the trustworthiness of you with money, right? Does that make sense? So your credit is really a measurement of your trustworthiness with your money. And it's that exact concept that lenders will look at in deciding whether to give you money. Lenders look at your credit and say, yes or no, should I give Sally money? Well, if based on your credit, and we'll get into what that really is and how they look at it here in a minute in another couple of videos, but if the lender looks at your credit and says, yep, that looks to me like they're believable and trustworthy, then I might be willing to extend credit. But on the other hand, if they look at the credit, if they look at your credit file and your credit report, and they've got some questions, and maybe they don't think you're believable or trustworthy or credible with your money, they may just say, nope, we're not willing to extend credit, or they may say yes, but, right? And that yes, but might be, a higher interest rate. It might mean that, say, if you're buying a house, a larger down payment, so they're actually lending you less money relative to the security that they're getting back, and that kind of thing. Okay, so does that make sense? You've got this word credit here, which in financial terms means something, but again, it's helpful to go back to the root of that word and look at the word credible and credibility and kind of see how that fits together and how that ties into what lenders are doing when they're looking at your credit when deciding whether or not to make you a loan. Okay, well, so that's a little bit of a language history lesson a little bit. So let's take a quick tour through financial credit and what it really means. And then, as I mentioned in the next video or two, we'll dive a little bit deeper into some of the technicalities. But you'll notice you've heard credit used different ways. Certainly credit card is a fairly common thing you've certainly heard of. And of course, in the case of a credit card, the credit card company is essentially your lender, right? Lender is the card company. Oops, company. Okay. Then there's a line of credit. A lot of times, you might hear of a home equity line of credit, but in essence, this is a loan from a bank. And it's a special kind of loan, but we won't get into that here. But again, it's a loan from a bank. When we use the word line of credit, it basically means an ability to borrow up to a certain dollar amount. Typically, lines of credit are secured, but not always. And again, there's much more information about security and that kind of thing in some of the other videos on borrowing, so I'm not going to go into that here. Um, so it also might be, if you say he has good credit, then that's really referring to what we're going to talk about here, and that really is that person's history of borrowing, really, and paying on that borrowed money. So good credit, or you could, of course, or bad credit, same thing, but it's really talking about a history. So when we talk about good credit, we're not talking about a good credit card or a good line of credit. We're talking about this person's behavior. So you can see how the term can be used differently. So when we also talk about credit, it might be, someone might be referring to it as an amount you can borrow. So you've heard of credit limit, right? So credit limit, usually that applies oftentimes in the case of a credit card, but it can apply in the case of a bank loan and so forth. But that's the maximum amount you could borrow, max borrowing on a certain type of loan or a certain credit card or something like that. That's your credit limit. So the term is used in a variety of different ways. And I thought it would be helpful to spend at least a few minutes here in this video just kind of going through this whole concept of what is credit and how is that term used. And in the next video, or you'll see in the video library, the video called "Building Good Credit" is a good one to watch next. And we'll also have one called "Credit Scores," which breaks down how that whole crazy credit score process works. So I encourage you to check those out. In the meantime, hopefully you have a better sense of what the word credit really means, and we'll see you in the next video.